Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. And I do expect that your preparation is going on perfectly fine. So now in this video, we will try to quickly analyze and we will quickly try to understand the questions which are given in this number 23 MTP. So as you all are aware, for every attempt, two series of MTPs will be released. In this video, I will be talking about MTP Series 1 for the November 23 examination. So whatever MTP Series 1 question paper and answers are there for subject of auditing and assurance, that we are going to have a detailed understanding in this particular session. So hope you will find this video informative. Hope you will find this video as a value addition in your preparation. So if you find it informative, please do share it with others and also make us reach to even more CA students. So without any delay further, let me directly jump into the question paper now, MTP question paper. So first category of questions will be case scenario based MCQs. So as we all are aware, two case scenario based questions will be tested in the examination. So first we will try to cover the case scenario number 1. So first we will try to get to know the facts of the case. Following is extract of information taken from financial statements of AAF Private Limited for the financial year 2022-23. They are giving an extract of the financial statements of some company. So they are giving some details like we have paid up share capital. Last year figures also they have given, current year figures also they have given, more or less same. Long-term borrowings when compared with the last year, in the current year long-term borrowings have fallen. Short-term borrowings when compared with the last year, in the current year short-term borrowings have increased. Other current liabilities, this also has come down. Last year it was 550, current year it was 350. Property, plant and equipment, it has also come down. Depreciation, it has also been come down. And profit or loss after taxes. Last year the loss was 6,000 rupees. Current year the loss was 5,000 rupees. Loss is decreasing. That means loss has decreased. If I put it in other way around, it is a good financial position only, Last year it was 6,000 crores of loss. In the current year, the loss was 5,000 crores. That means it is a good sign. Next one. Assume that there are no tax adjustments. Okay, first they have given extract of the balance sheet. Now they are talking about few items of the above extract in a detailed manner. The schedule of short-term borrowings reflects as under. So if you see in the main heading, we are having short-term borrowings when compared with the last year, there was an increase of 5,000. So now they are trying to explain about that in a detailed manner. So particulars, loans repayable on demand from MMT bank. So what are short-term borrowings? Short-term borrowings is nothing but they have taken one demand loan from some bank. So that is actually a short-term borrowing. It was 5,000, 50,000. The figures are actually in thousands. So it will become how much? So it will be 5 crore rupees. Last year it was 5 crore rupees. In the current year it was 5.5 crores. Cash credit limit against hypothecation of stocks guaranteed by all directors. See, this short-term loan is a cash credit facility. The short-term borrowing of the company is as a result of cash credit facility, short-term borrowing facility. Next one. It has been further noticed during the course of audit that quarterly statements which are filed by the company with its bank for availing cash credit facilities of 5.5 crores during the year versus books of accounts reflect following details. See, if you remember, when we understood the audit reporting chapter, in that also when we have understood Caro. So if you have not followed my classes, don't worry. For Caro, I have uploaded recently a revision video revising all the 21 clauses of the Caro. You can refer it for better understanding of Caro provisions. So whatever it is, let us come back. So as I have discussed, when we are actually discussing in the audit reporting chapter, when we are actually understanding Caro reporting requirements, I told that in case if you obtain short-term borrowing, especially cash credit facility, periodically you have to submit the quarterly stock statements. Periodically, the borrower has to submit periodical stock statements with the banker. On the basis of that stock statements, drawing power will be calculated. This point I have also explained in audit of banks also. So whatever it is, so quarterly the company is required to submit stock statements. They are telling value of the stock which was mentioned in the stock statement submitted and actual value of stock as per books of accounts. So if you see here, for the quarter 30th of June 2022, the value as per the books of the actual value of stock as per books of accounts is 70,000. If I'm not wrong, it will be 7 crore rupees. But in the stock statement, whatever they have submitted, they are showing the value of the stock as 8 crore rupees. That means they are, it is more or less equal to fraud only. Why? Because you have to submit genuinely whatever stock is available. But in the books, the stock is only 7 crore. But what the management has done, they have submitted fake stock statement. They have inflated the stock value and submitted it to the bank to get the extra borrowing facility. Is it not a violation? Yes. Are they committing wrong? Yes. Even if you look at the next quarter also, 30th of June 2022, during that quarter also, the value of the stock was 65,000. But what they have submitted to the banker in the stock report, they have submitted the value of the stock as 7 crore rupees. Next one, same happened when it comes to 31st of December quarter also. Actual stock was 7 crore rupees, but in the stock statement, whatever they have submitted, they have shown the value of the stock as 8.5 crores. Once again, they have committed a mistake. And when it comes to the last quarter, in the last quarter, they have submitted the correct stock statement only. But in the initial 3 months, they have submitted wrong stock statements. And if you remember, in the CARO, there is a specific point which you are required to report on this. So if you refer clause 2 of CARO 2020, it says if your client has taken any short-term borrowings, they will submit periodical stock statements. If the periodical stock statements are not matching as per books of accounts, you have to give a negative comment in the CARO. So here definitely I will give a negative comment in my CARO report. Why? Because the banker has submitted, the borrower has submitted fake stock statements with the banker. So this I have to give a negative comment in my CARO report. Next one. So this is what they are trying to say about short-term borrowings. Now let us come to next one. It has also been noticed that long-term borrowings consist of term loan from MMT Bank. So the company is also having long-term borrowings now. Now they are talking about long-term borrowings. So it has also been noticed that long-term borrowings consist of term loan from MMT Bank. Term loan outstanding has reduced in comparison with the last year. Obviously, if you see here, when compared with the last year, in the current year, it has reduced. However, during the year 2022-23, the company has not paid one installment on time, which is overdue for 65 days as on the balance sheet date. That means the company has made a default in the repayment of borrowings. So even regarding this also we have some reporting requirements under CARO. Under CARO, we need to report certain things regarding repayments of loans. Number one, whether the client has made any default in the repayment of loans. If yes, amount of default, period of default. Have they made any default? Yes. How much amount? 5 lakh rupees. So this I have to mention. And in CARO only there will be one more point. You are required to report the amount only. You are required to report if any amount is outstanding for more than 90 days, proper steps are taken by the management. But here in the given case, one installment is not paid, but it is overdue for only 65 days. So what I am trying to say here is, if we go to CARO, let me take it there. Just for the sake of our understanding, I will show it to you what exactly I am trying to talk about it. Yes. So these are the CARO reporting requirements. So if you see here, this is what I am talking about. So regarding repayment of loans, there are certain points which auditor is required to report. So if you see here, first point, if there is any default in the repayment of loan, I need to mention what is the amount of the default and what is the period of the default. Yes, in the given case, the client has made a default, I am required to give negative comment for this. And also, if you see here, if you see this particular point, this one, not this one. If any amount is outstanding for more than 90 days, whether reasonable steps have been taken. That is actually for third point. Sorry. So when it comes to repayment of the loans, here, default in repayment of loans. That means if the client has made any default in repayment of borrowings, if yes, period and amount of default is required to be reported. Now you tell me, here the client has made a default. Yes. How much amount? 5 lakh. Am I required to give negative comment? Yes, you are required to give a negative comment. So even there will be negative comment, I will give it in CARO in point number 9 of the reporting requirements. Able to understand everybody? Next one. So let us see few more things. The credit facilities have been classified as standard assets by the bank in accordance with prudential guidelines of RBI. It has been classified as standard category only. Next one. Other current liabilities as on 31st of March 2023 include TDS payable. So if you see here, in other current liabilities are also there. In that other current liabilities, they are talking about one specific item. So in this other current liabilities, they are telling it includes some one of the liabilities TDS payable. How much amount? 1 lakh rupees. Out of which 60 lakh, 0.6 lakh, that is 60,000 for the month of February 2023 was due for deposit as on 7th of March 2023. So they have TDS payable of 1 lakh rupees. Out of that 60,000 which they should have deposited, that is related to the month of February. The due date is 7th of March 2023, but still as on the balance sheet date, they have not yet paid it. And balance 40,000, this is related to March month. March month anyhow they will pay it in the October. March month they will anyhow pay it in the month of April. March month anyhow they will pay it in the month of April. So this is not yet payable. They will pay it on the April month. So this is a statutory due. TDS is what? Statutory due. And regarding statutory dues, do we have any reporting requirement under CARO? Yes, we do have a reporting requirement regarding statutory dues under CARO. And statutory dues are also divided into two categories. Number one is undisputed statutory dues, other one is disputed. Did they say there is any dispute? No, they did not say anything about dispute. So this is a undisputed statutory due. So regarding undisputed statutory due, what is the reporting requirement? So they are telling in respect of undisputed dues, is the company regular in depositing? Whether the company is regularly on or before due dates depositing the statutory dues with the governments or not, I need to check. If not, you have to report the amount of that outstanding statutory dues if they are outstanding for more than 6 months from the date they become payable. So now you tell me they are asking us to report the amount of outstanding dues only if it is outstanding for more than 6 months. If you see here in the question, the amount was payable on 7th of March. It was still due on 31st of March. Is it outstanding for more than 6 months? No. Am I required to mention the amount of undisputed statutory due? Not required. When you are required to mention the amount of undisputed statutory dues, only when it is outstanding for more than 6 months. In the given case, this entire 1 lakh rupees, it is not at all outstanding for more than 6 months. I am not required to comment any amount here. Next one. You are a part of engagement team conducting audit of AAF Private Limited. Now they are coming to the question. So they have told all the facts. They have given extract of the balance sheet. They have explained in detail certain certain items of the financial statements. Now they are telling you are appointed as an auditor. You are a part of engagement team. As part of assigned work, you are also responsible for providing information or input to your senior for reporting under CARO 2020 for the financial year 2022-23. Based on the above, they are asking you some questions which they are expecting us to answer them. Let us see one by one. Number one, first question. Considering description about short-term borrowings in the case study, which of the following statement is in accordance with CARO 2020? We have seen short-term borrowings now. We have seen that whatever stock statements the company has submitted with the banker, are they correct? No. Are we required to give negative comment? Yes, we are required to give negative comment under CARO. So now they have given some statements. We have to choose the correct statement. Number one, the statutory auditor is required to provide details of differences in quarterly returns filed with the bankers with its books of accounts. So is he required to provide the details of the differences? Yes. So this is the correct option. Obviously, whatever, since the company did not submit the correct stock statements, you are required to report it. So obviously, first option is the correct option. But anyhow, let us see what are the other options saying. The statutory auditor is required to provide details of differences only in respect of those quarterly statements where there is a discrepancy of more than 10%. No, here most of the students will get confused. See, second statement says you are required to report the differences in the stock statements in the CARO only when the difference is 10%. No, guys. So where you will get confused is, if you go to the second clause of the CARO, they will say on doing physical verification, if you find any difference, then you are required to report the amount of difference when the difference is 10%. So discrepancy of 10% or more will become applicable when the physical verification mismatch is there. But however, if the stock statements are wrong, there is no 10% criteria. If the stock statement is wrong, whatever may be the amount of discrepancy, you have to compulsorily report it. So this is where you get confused, guys. This discrepancy of 10% will not become applicable in the case of wrong statements. This 10% discrepancy limit will be applicable in the case of physical verification. So that's why this statement is also incorrect. The statutory auditor is not required to provide details. The moment you read this here only, you have to stop. Why? Because the statutory auditor is required to provide the details. This option is saying statutory auditor is not required to provide the details. This is absolutely wrong. And even D option also, if you see here, the statutory auditor is not required to provide the details. The moment you read this not required to provide the details, you have to stop here. This option is wrong. Why? Because he has to report it. So option A will be the correct option. Understood? Next one. The company has not paid one installment of 5 lakhs on time, which is overdue for more than 65 days as on the balance sheet date. Identify likely correct statement in this regard in relation to reporting under CARO. As we have seen, the company has made a default in repayment of one of the installment. So as per the CARO, you are required to report what is the period of default, amount of default. You have to report it. The account has not become NPA, hence there is no reporting requirement. Is it so? No. There is nowhere mentioned in the CARO if it is NPA, then only report. If it is not NPA, no need to report. Nowhere they have mentioned. So this option is wrong. The reporting requirement is necessary only when company is declared as willful defaulter. Did they say it? No. Whether the company is a willful defaulter, not a willful defaulter, if they have made any default, they have to report it. So this is also wrong. Amount of default along with period of default is required to be reported. Yes, this is the correct option. Next one. The reporting requirement is necessary only when the company has diverted amount of term loans for some other purpose. No, even they have diverted, not diverted. If they have made any default, they have to compulsorily report it. So this option is also wrong. Option C will be the correct option. Next one. As regards TDS payable of 1 lakh included in other current liabilities, what input would be provided to you by you to your senior for reporting under CARO 2020? Let us see. TDS payable of 1 lakh in the financial statements shall not be reported as it does not meet the necessary reporting requirements. Obviously, you are required to report the amount of outstanding statutory dues only when they are outstanding for more than 6 months. In the given case, it is not outstanding for more than 6 months, so it did not meet the reporting criteria. It is not required to be reported. Option A is the correct option. Let us see what other options are there. It is in the nature of undisputed statutory dues. Hence, outstanding amount of 1 lakh not deposited is required to be reported. No, it is not required to be reported. It is in the nature of undisputed statutory dues. However, only outstanding amount of 60 lakhs is not deposited, is to be reported. No, nothing is required to be reported. Entire 1 lakh is not required to be reported. TDS payable of 1 lakh does not fall under the meaning of statutory dues. So, sorry, this is also, they are telling no question of reporting. Yeah, you need not report it, but the correct reason is it does not meet the reporting requirements. You will not report it. Obviously, you are not going to report. Why you are not going to report? It is because it does not meet the reporting requirements. It is not outstanding for more than 6 months. Here they are telling various reasons. Second option they are telling it is reported. No, wrong. In the third point they are telling you have to report 0.6 lakh. That is also not correct. In the next point they are telling the TDS does not fall under meaning of undisputed statutory dues. No, it falls under meaning of undisputed statutory dues, but it did not fulfill the reporting criteria. That's why we are not reporting it. So option A will be the correct option. Next one. Which of the following is not a reporting duty of the statutory auditor regarding PPE, property, plant and equipment? So regarding property, plant and equipment, we have various matters which are required to be reported. So like if you see here, whether the company is maintaining proper records which show quantitative details and situation of fixed assets, whether physical verification of fixed assets is carried out at reasonable intervals, whether immobile properties are held in the name of the company, whether the company has revalued its PPE, if yes, whether it is on the basis of registered value, and whether any proceedings has initiated against against the company for holding Binami properties. These are the 5 reporting requirements. They are asking which is not the reporting requirement regarding, see here, which is not a reporting duty regarding PPE. Let us see. Number 1, whether the company is maintaining proper records. Is it a reporting requirement? Yes. Whether PPE have been physically verified by the management at reasonable intervals. Yes, this is also reporting requirement. As an auditor, you are required to give a comment whether physical verification of fixed assets is done by management at reasonable intervals. Next one, whether property, plant and equipment has been verified physically by the auditor. No, this is not a reporting requirement. So this is the correct option. They are telling which is not a reporting requirement. C is not a reporting requirement. Why? Because even if you read the terminology here, whether fixed assets have been physically verified by the management, CARO is asking you to only comment whether fixed assets are verified by the management or not. They did not say anywhere whether physical assets are verified by the auditor or not. So that is not a reporting requirement. Whether title deeds of all immobile properties held in the name of the company, this is actually a reporting requirement. So which is not a reporting requirement? C is not a reporting requirement. Next one. The company has reflected losses in its financial statements for the year 2022 and that is current year and previous year. If you see the extract of the financial statements, once again, the company has made losses. In the current year also it has made loss. In the previous year also it has made the loss. Next, what is the question actually? Let us see. Which of the following statement is likely to be correct in this regard while reporting under CARO 2020? See, under CARO 2020, we have one reporting requirement regarding losses. But they are asking you to report only cash losses, not loss as per statement of P&L. This one. This point, if you see, 17th point, whether the company has incurred any cash losses in the financial year as well as in the preceding financial year. So if there is a cash loss, then you are required to report. If there is no cash loss, if there is only loss as per statement of P&L, you are not required to report it. You are not required to report it. So here they are telling only loss. See, how to calculate cash loss? Here they have given a hint in the question also. See, we have loss after tax. This is loss as per statement of P&L. How to find out cash loss? To this you have to add back non-cash based expenses, deduct non-cash incomes. See, above only they have given depreciation. You have to add the depreciation to the loss as per statement of P&L, then you will get cash loss. So cash loss is 5,000 in the current year. In the previous year it is 6,000. To this you have to add the depreciation. To find out cash loss you have to add the depreciation. If you add 7,500 here, if you add 9,500 here, actually the company is having a cash profit. The company is having a cash profit of 2,500 here. Here it is having a cash profit of 3,500. So the company did not make cash loss. There is loss as per statement of P&L. Agreed. But reporting is required only if there is cash loss. But in fact here there is no cash loss. The company has made a cash profit. Is there any reporting requirement? Not required. There is no reporting requirement in the given case regarding the losses. So let us see. losses reflected in the statement of P&L are required to be reported. Is it so? No, they are not required to be reported. Loss reflected in the statement of P&L for year 2023 alone is required to be reported. No, for both years it is not required. This is also wrong option. There is no requirement to report losses reflected in the statement of P&L. Yes, this is the correct option. There is no requirement. Why? Because the company did not make cash loss. In fact, it has made a cash profit. The company's losses reflected in the statement of P&L in the financial year 2022 and 23 are less than prescribed percentage threshold limits. No, there is no percentage limits. Nothing have been mentioned. The Caro simply told if it is a cash loss, reported in the current year and previous year. They did not say if the loss is this percentage, if the loss is this much percentage of turnover, paid up capital. No such criteria. Why we are not reporting is why, because there is no cash loss. There is no limit. There is no percentages etc. prescribed here. So this option is also wrong. So which is the correct option? C is the correct option. Guys, able to understand everybody till here? So this is how you need to analyze the case scenario based MCQs and write the correct answers. Hope you guys are able to understand case scenario number 1. Now let us come to second case scenario. So let us try to understand and answer it. Sukrit, a CS student, has decided to participate in mega conference of CS students being organized by Student Skills Enrichment Board of Studies Operations ICI to be held in South India. He has decided to try his luck for presenting a paper in one of the technical sessions of the conference on the topic of nature, objective and scope of audit. He has to first submit for approval a soft copy of the paper to the competent authority. Understood? Very general content. While preparing a draft for the presentation, he has included some paragraphs on the topic. Para A requires filling of certain gaps to explain nature of auditing to prospective audience at the conference. So as you could see here, Para A contains some blanks which we have to fill it. Para B and C have certain misleading and false statements which need corrections. Para D needs certain elaborations. So now regarding each para, there will be a question. We'll try to read each para here and answer the simultaneous question. Para A, what is that? An audit of financial statements provides which assurance, guys? It provides a reasonable assurance from nature, objective and scope of audit. We have discussed this various times. An audit of financial statements provides reasonable assurance to the users of the financial statements. It is a reasonable assurance is a what? High level of assurance, but not absolute assurance. The auditor has to see the effect of the financial statements collectively. You should not see each and every effect of each and every misstatement. You have to analyze the effect of all the misstatements collectively. So the auditor has to see the effect of misstatements collectively. Together, put together all the misstatements collectively. You have to see what is the effect of all the misstatements put together. And misstatements in the financial statements can arise due to frauds or errors or both. This is what the apt points. Now let us see what question they are asking regarding para A. Try to help him answering by following questions. What is that? Identify appropriate words to be used in blanks to make the sentences meaningful and relevant in context and the theme of topic. They're asking which words we have to fill. So as I have listed out, first it should be reasonable. So first it should be reasonable. So A eliminated, D eliminated. So B and C only start with reasonable. Then we have high level of assurance. So here we have reasonable assurance, high level of assurance. Able to understand? Here they are telling moderate. So this also will be eliminated. So in the order whatever we have filled, reasonable assurance, high level of assurance, but it is not absolute assurance. But if you read the option here, instead of absolute, they are using the term complete. Complete, absolute, 100%, both convey the same meaning, no? So that's why audit gives reasonable assurance. It is a high level of assurance, but not absolute or complete assurance. And you have to see the effect of misstatements collectively. Nothing but in total, you have to see the effect. Very good. And misstatements in the financial statements can happen because of fraud also, or it can happen because of error also. So that is what the last term here, error. Understood everybody? So which one is the correct option? 2.1 B is going to be the correct option. Now let us come to next para. Para B. Audit of financial statements should be organized adequately to cover all aspects of the entity relevant to the financial statements. Obviously, we have to cover all aspects relating to the financial statements. The auditor makes a judgment of reliability and sufficiency of financial information by making a study and assessment of accounting system and internal controls. Yes, this is also correct. He also carries out appropriate tests and procedure. Due to professional training and knowledge acquired by the auditor, he can authenticate genuineness of the document. That means they are telling, because auditor by using his knowledge and training, he can authenticate. That means he can give a guarantee about the genuineness of the document. That means you are verifying financial statements using your professional knowledge. You can give a guarantee on that financial statements. Authenticating genuineness means what? Giving a guarantee of the financial statements. Tell me, is this statement correct? No. Due to financial training and knowledge acquired by the auditor, he cannot authenticate. What do you mean by authenticating genuineness? That means giving guarantee. Can you give guarantee? No. He can't authenticate the genuineness of the document. This statement is false. However, he is not expected to perform duties which fall outside of the competence. Yes, this I agree with it. And auditor is not an official investigator. Everything I agree. What is a wrong statement? This is the wrong statement. Auditor can't authenticate. Auditor can't give the genuine. Auditor can't comment about. Auditor can't give guarantee regarding genuineness of the financial statements. Let us see. After reading para B, which of the following statements is false as regard the scope of an audit of financial statements? Audit of financial statements should be organized to cover all aspects. This statement is correct only. The auditor makes a judgment about reliability and sufficiency of information by making study of accounting system and internal control. This is also correct. Due to professional training and knowledge acquired by the auditor, he can authenticate genuineness. That means he can give guarantee of document. No, he can't give. This statement is incorrect. So they are asking us to find out incorrect statement only. So which one will be the incorrect statement? C will be the incorrect statement. Auditor is not an official investigator. This statement is also correct only. Now let us come to para C. The process of audit suffers from certain inbuilt limitations, that is what we call it as inherent limitations. Inherent limitations of audit may arise due to nature of financial reporting, nature of audit procedure, and also need to strike a balance between reliability of information and cost of obtaining, nothing but time and cost comparison. The information being relied upon by the auditor cannot lose its reliability due to historical nature of financial information in the financial statements. This statement is false. Why? Because as an auditor, we are verifying historical information. Historical information means information which has happened in the past. Since there is a gap between happening of the information and verifying. See, transaction has taken place 6 months ago and we are verifying the transaction after 6 months. See, because of passage of time, the quality of the evidence will get reduced or not. The reliability of the evidence will get reduced or not. See, today transaction is happening, immediately I am verifying. It is very reliable. Transaction happened 6 months ago, now I am verifying. That means in between management has got some time to do some manipulation. So as and when the time passes, the reliability of audit evidence will come down. But what is the statement they are telling? The information being relied upon by the auditor can't lose its reliability, they are telling. But in fact, because of passage of time, the evidence will lose its reliability. The quality of evidence will get decreased because of historical nature of information. So the correct statement is the information being relied upon by the auditor will lose or can lose its reliability. Its quality will get reduced because of the passage of time. But what statement they are telling? Can't lose its reliability. This is actually wrong. The correct statement is it will lose reliability. However, future events may affect an entity adversely. This we agree. The only statement which we don't agree is this statement which we don't agree. They are telling information will not lose reliability, but in fact the information will lose reliability because of historical nature. So if you read it, after reading para C, which statement need to be corrected in draft regarding inherent limitations? Let us see. Inherent limitations of audit may arise due to financial reporting. This statement is correct only. Next one, the information being relied upon the auditor by the auditor cannot lose its reliability. Yes, this statement needs correction. We have to write it as will lose its reliability. Future events may affect an entity adversely. This statement is correct only. The process of audit suffers from some limitations. This is also correct. So which statement needs modification? This statement needs modification. So B is the correct option. Next one. The chief utility of the audit lies in reliable financial statements, on the basis of which state of affairs may be easy to understand. One of the main advantage of audit is it increases the reliability of financial statements. Its basic nature lies in providing assurance, that is confidence to the users of the financial statements. Apart from this obvious utility, there are various other advantages of audit also. Some or all of them are of considerable value even to those enterprises and organizations where audit is not compulsory. Nothing but this paragraph is talking about advantages of audit. Regarding this para also we have some questions. Let us have a look at them. Para D states that an audit provides advantages of considerable value to enterprises. Which of the following is not one of the advantages? They are asking us to find out from the below which is not an advantage. It acts as a moral check on employees. Yes, it is an advantage. It acts as a control on the employees. It acts as an appraisal function. Yes, it is like a review function. Audit is like review function. This is also advantage. Its chief advantage lies in safeguarding financial interest of management. False. The main advantage of audit is safeguarding the interest of the people, those who are not associated with the management, not the management. So this option is false. One of the main advantages, it protects the financial interest of the people who are not associated with the management, but the option is telling it will safeguard the interest of the management. That is actually false. It is useful for settling trade disputes. Yes, this is also correct only. Which statement is incorrect? C will be incorrect. Next one. Parody states that audit can be of considerable value even to those enterprises where it is not compulsory. Even in context of companies in India, which of the following statement is correct? So keeping in mind the provisions of the Companies Act, they are asking which of the following statement is correct. OPC and small companies are exempt from audit? No. All companies, the moment you incorporated yourself as a company, audit is legally obligatory, legally compulsory for every entity. OPC, small company and Section 8 company are exempted from audit? No, this statement is also false. For all companies in India except Section 8 companies, see, even Section 8 companies are also required to undergo audit. For all companies in India, audit is legally obligatory. This statement is correct. Understood? So with this, we are done with the two case scenario questions. Now there will be some general MCQs. Let us try to answer them. Which of the following statement is true regarding financial statements of a bank? They are asking one question regarding how the financial statements will be prepared. Number one, financial statements of the bank are required to be prepared in accordance with third schedule of the Banking Regulation Act. Yes, when it comes to banks, financial statements are required to be prepared as per Banking Regulation Act, not as per Companies Act, etc. So first option is correct. B option, if you see, they are telling Schedule 3, no. Third option, they are telling Schedule 2 of Reserve Bank, no. Fourth option, they are telling as prescribed by C and AG, no. In case of banks, financial statements will be generally prepared as per Banking Regulation Act. So option 1 is the correct option. Option A is the correct option. Which of the following is not likely a purpose of audit documentation? They have given various purposes which we need to find out which is not a purpose. It helps to show audit was conducted in accordance with requirements of SQC1. So whether you have done audit qualitatively or not, that audit documentation will prove. Yes. It serves as a record of matters of continuous significance to future audits. If you maintain audit documentation, that will act as a reference in the future years. Yes. It assists engagement. The engagement team to plan and perform the audit. Yes, it will help in planning. It will help in planning and performing the audit. It can directly help the auditor in expanding the client base. That means if you maintain audit documentation, that will expand your client base. Do you agree? No. Audit documentation has nothing to do with expanding the time base, expanding the client base. Just because you maintain proper documentation, will you get more clients? No. So that's why option D is not the correct option. To evaluate internal control of Kingsway Limited, a team member of auditors used a method according to which number of questions relating to internal control were required to be answered by the employees of the company, drafting the questions which are required to be answered by client's staff. What do we call that method as? Internal control questionnaire, we call it. After obtaining the answers, there was a discussion relating to those answers between team members of the auditor and employees of the company. For a clear picture, state the method of evaluation which is used, internal control questionnaire. Next one. The term internal financial controls basically refers to policies and procedures put in place by the companies for ensuring number one, reliability of financial reporting, compliance with applicable laws and regulations, safeguarding of the assets, effectiveness and efficiency of operations, prevention and detection of frauds. So which is the objective? In fact, practically speaking, all are objectives of internal financial controls. If you open the risk assessment internal control chapter, read the question internal financial controls, you will find all these objectives. So correct option is all. Next one. Financial statements of a company have been put up for audit before the auditor. On going through the financial statements, he wants to verify some major bills debited in machinery repair account. The purpose of is to ensure that bills are entered correctly and their classification is proper. As regards verification of bills debited in the machinery repair account, identify what he intends to perform. By verifying bills in the machinery repair account, what he is trying to do? Is he doing test of controls? Is he verifying internal controls? No, he is verifying the transactions and supporting documents. No, it is not test of controls. It is a test of transaction. See, in the test of details also, if you verify assets and liabilities, we say test of balances. If you verify P&L items, we call test of transactions. Machinery repair is a P&L item. So he is doing test of transaction. Is it test of balances? No, it is not a balance sheet item. Is it risk assessment procedure? No. So what is the correct option? B is the correct option. Next one. The securities premium account may be applied by the company for which of the following purposes? Can they use it for payment for creditors for material? No. Can they use it for purchase of fixed assets? No. Can they use it for repayment of loans? No. Can they use it for writing of preliminary expenses? Yes. Next one. What may be defined as information used by the auditor in arriving at the conclusion on which auditor opinion is based? What is the information on which auditor's opinion is based? That is what we call it as audit evidence. Straight away question. While auditing books of accounts of Mehra Limited for the financial year 2022-23, the auditor of the company used an audit procedure according to which complete documents and records of the company were checked in detail in order to obtain audit evidence. What is that method, guys? Inspection, detailed inspection of documents. So which technique he followed? Inspection he followed. Next one. During the audit of sales, the auditor found that recorded sales represent goods which were ordered by the valid customers and were dispatched and invoiced in the period. The auditor is addressing which of the following assertion? The auditor is verifying whatever sales which are recorded in the books of accounts, did they really happen? Which assertion it is? Occurrence we call it. So he is verifying occurrence assertion. Next one, ABC Limited is engaged in manufacturing of fabrics from yarn purchased from different suppliers. Occasionally, it also manufactures fabrics tailor-made in accordance with the requirements of certain mills from yarn received from these mills. ABC Limited raises bills of its labor charges only on mills for converting yarn into fabrics. The auditor of ABC Limited tries to ensure that stocks of the company as to the year end do not include stocks pertaining to the mills. Which assertion auditor tries to verify? See here, auditor wants to obtain evidence regarding stock. Understood the question what they're asking here? So you are conducting audit of ABC Limited. It is doing some manufacturing process. So periodically what it will do is on job work basis, someone will send the stock to them. They will do the job work and return that. As on the balance sheet date, it will have some of its own stock in its own in its warehouse also. It will also have stock of others also. So as an auditor, you want to make sure that even though the others stock is also there in the warehouse, it should not form part of stock of this company. Only that stock which is belonging to this company, that only should be recorded in the balance sheet. That means what auditor is trying to verify? Ownership is going to verify. Why? Because assume that in the ABC Limited premises, they might be having 10,000 quantity of stock. But out of the 10,000 quantity, 2,000 belongs to some third parties. 8,000 is only the rights, 8,000 is only the property of the company. Only 8,000 should be recorded in the books of accounts. This 2,000 should not be recorded. Why? Because that is not the property of the client. So by verifying this, what auditor is trying to verify? He is trying to verify rights and obligations. Whatever stock against which they have rights, only that is recorded in the books of accounts, not some other party's stock. Able to understand? So this is what case scenario number 2. Guys, able to sorry, not case scenario number 2. It is these are the what actually general MCQs are. So with this MCQ section we have covered. Now let us come to true or false questions. The next category of questions will be true or false statements. Let us try to understand them in a detailed manner. Number 1, when inventory is under the custody and control of a third party, if it is material to the financial statements, the auditor cannot obtain sufficient and appropriate audit evidence regarding existence and condition of that inventory by taking written representation from the management. Do you agree with that? So this question is relating to SA 501, inventory lying in the custody of third party. Sometimes your inventory might be lying in the custody of a third party. That also you need to obtain audit evidence. How you will obtain audit evidence? By obtaining external confirmation and by performing other audit procedures like you going and verifying that premises, appointing another auditor, etc. So do you think if the stock is lying with a third party, if you just get a management representation, will that give you audit evidence? Never. The same thing they try to say it in the question. They are telling if inventory is in the custody of third party, you cannot obtain audit evidence by taking written representation. 100% correct. Why? Because if inventory is lying with a third party, you can obtain audit evidence by performing external confirmation or by performing some other procedures. You can't obtain audit evidence regarding stock lying with a third party simply by asking management written representation. How management representation will give you evidence regarding stock with a third party? That will not be enough. So you cannot obtain sufficient and appropriate audit evidence by taking written representation because you have to follow other techniques. Like you have to request confirmations and you have to do inspection or other audit procedure. Written representation is not a procedure to obtain audit evidence. So this statement is 100% correct. Next one. While auditing the books of accounts of XYZ Limited, the auditor of the company was involved in examining records and documents in paper form, electronic form, etc. and was also conducting physical examination of asset. In the present case, audit procedure used by the auditor is known as observation. Wrong. It is inspection. In the inspection, we try to verify the documents. In observation, we look at the process being performed by others. So this statement is false. It is inspection, not observation. Next one, the overall audit strategy is more detailed than audit plan. Incorrect. Why incorrect? Why? Because plan is more detailed than strategy, not strategy is more detailed than plan. Dividends are recognized in the statement of P&L only when the amount of dividend can be measured reliably. See, if you can measure the dividend, can you recognize it? No. If you simply measure the dividend, you can't recognize it. The condition for recognizing dividend is the dividend can be recognized only when entity is having right to receive the dividend, when it is probable that economic benefits will flow to the entity, and it can be measured reliably. When all these three conditions are satisfied, then only we can recognize. In the question they are telling, if it satisfies this one condition, we can recognize dividend. Is it so? No. The other two conditions are also required to be satisfied. So this is incorrect. Next one. Banks recognize income on NPS on accrual basis. No, they will recognize income on NPS on cash basis. This is also incorrect. With reference to general IT controls, the objective of data center and network operations is to ensure that systems are developed, configured, implemented. See, this you can refer to the audited and automated environment. There we have explained various kinds of controls. So they are telling whether systems are developed, configured and implemented to meet financial requirements. This is a responsibility of system acquisition related controls. System acquisition, development and maintenance, these controls look after whether systems are developed, configured, implemented to meet the financial reporting objectives. In the question, they are talking about data center and network operations. The controls over data center and network operations, they deal with whether production systems are processed to meet financial reporting objectives. So, but in the question they have told data center and network operations deal with whether systems are developed, configured and implemented. No, that is actually the responsibility of system acquisition development controls, not data center and network operation controls. Next one. An auditor is considered to lack independence if the partner of the firm deals with the shares and securities of the company. Obviously, that's why we have 141 subsection 3 clause D, which disqualifies the auditor if he is holding shares in the company, holding company, subsidiary company, associate company, he or his relative or partner. So why that provision has been given? Why? Because if you have shares in the company, you will your independence will get compromised. So this statement is true. If the auditor is dealing in the shares of the company, he will be considered to lack independence. That means his independence will be affected. So this statement is correct. Next one. The first auditor of a government company can be appointed by board of directors within 30 days. No, in the case of government company, the first auditor first will be appointed by C and AG within 30 days. If they fail, then the power will come to board of directors. Not directly board of directors will get the power. So this statement is also incorrect. So these are the answers to true or false statements. Now let us go into the descriptive questions in a detailed manner. Number one, professional skepticism refers to an attitude that includes a questioning mind, being alert to conditions that may indicate possible misstatement due to fraud or error, and a critical assessment of audit evidence. The auditor should plan and perform an audit with professional skepticism, recognizing the circumstances that may exist that cause the financial statements to be materially misstated. Explain giving examples. Simply they are asking you to explain the concept of professional skepticism. This is from the nature, objective and scope of audit chapter. So if you remember, there we have seen professional skepticism means maintaining an attitude of professional skepticism and being alert to unusual circumstances, and also critical assessment of audit evidence. To what circumstances you have to remain alert. If you maintain professional skepticism, what kind of risk you can avoid by overlooking unusual circumstances, overgeneralizing while taking decisions, taking inappropriate decisions regarding nature, timing and extent of audit procedures. All this risk we can reduce by maintaining professional skepticism. Just write that answer. Next one. As per SA 315, identifying and assessing the risk of material misstatement through understanding the entity and its environment, the auditor shall obtain an understanding of relevant industry, regulatory and other external factors, including applicable financial reporting framework. Explain giving examples. So this question is there in the material. You will find it if you follow our material, you will find it in the chapter Audit Strategy, Planning and Program. See, when you have to obtain understanding of audit environment, when you have to understand about the client's environment, you will try to understand about industry, regulator and other external factors. They are asking you examples of some matters which you will try to understand regarding client's industry. When I say go and understand about client's industry, regulatory and other external factors, what examples you will try to understand regarding industry, regulator and other external factors? See here, if I give you examples, sir, what things you will try to understand, sir, regarding regulatory environment or external factors? In what environment, in what competitive environment your client is operating? What is its demand? What is its capacity? What is its product? Who are the key suppliers? Who are the key customers? Technological developments. What is the impact of technology on your client company? What is the energy supply and cost? The effect of laws and regulations. So when I say you will try to understand about industry and regulatory requirements, these are a few examples which you will try to understand. This is not a new question. This question you will find it in our material in the Audit Strategy, Planning and Program chapter, Understanding of Entity. In that you will find it. Next one. SA 560 deals about subsequent events. deals with auditor's responsibility relating to subsequent events in the audit of financial statements. Financial statements may be affected by certain events that occur after the date of financial statements. Many financial reporting frameworks specifically refer to such events, explain those events, and also define subsequent events. This question is from SA 560. The same question is there in our material. So let me show that to you. Same as it is question we have in our material also. I will show you. See here. See, same question as it is question. SA 560 deals with auditors' responsibilities, and also there are various, even the financial statements framework, like even accounting standards also will talk about subsequent events. They're simply asking, write the subsequent events as per accounting standards and also write the definition of subsequent events as per SA 560. So you have to write what are subsequent events as per accounting standards, adjusting events, non-adjusting events, that you have to write, and even you have to write the definition of subsequent events as per SA 560. Subsequent events are those events which happen after the date of financial statements, before the date of auditor's report, but the fact came to auditor's knowledge after the date of auditor's report, so you have to write it. That's all. You will get 3 marks. Next question. While it is true that companies can benefit immensely from the use of data analytics in terms of increased profitability, better customer service, etc., analyze various functions that can be performed by even the auditor using data analytics. This question is from Audit in an Automated Environment. Nothing but they are asking how the auditor can make use of data analytics. As an auditor, how you can use data analytics? How we can use data analytics? Using data analytics, we can check the completeness of data, selection of audit samples, recomputations, reperformance, analysis of general entries, fraud investigation, and even we can find out control deficiencies. Direct question from the material. Audit in an Automated Environment. Next one. Significant risk often relate to significant non-routine transactions or judgmental matters. Non-routine transactions are transactions that are unusual due to either size or nature and that therefore occur infrequently. First, they are telling some statements. See, when there are some non-routine transactions, when there are some not usual transactions, when you have some special transactions, the risk will always be higher. Judgmental matters may include the development of accounting estimates for which there is a significant measurement uncertainty. Similarly, when some items involve estimation, there is uncertainty, there also risk is higher. In context of significant risk, explain the factors which are to be considered by the auditor in exercising judgment which risk is significant risk. Nothing but as an auditor, you need to analyze which risk is a significant risk. How you will come to know? See that which risk is significant risk, that has to be decided by the auditor using his professional judgment. Now they are asking how auditor will decide. How the auditor will decide whether which risk is a significant risk, what factors he will consider. Sir, how the auditor will decide whether risk is a significant risk or not? Some factors he will consider, like is it a risk of fraud? If it is a risk of fraud, when compared with error, risk of fraud is significant. Whether the risk is related to significant economic, accounting or other development changes like changes in the laws and regulations. If the risk is arising because of regulatory environment, that is also a significant risk. If the transactions are complex, then also risk is significant. When the risk involves transactions with related parties, if there are transactions with the related parties, risk is very high there. The degree of subjectivity, nothing but the degree of estimation involved. Higher the estimation, higher the risk. And also, if the transactions are outside the normal course of business, then also the risk will be higher. So these are the factors which will be considered by the auditor in analyzing which risk will be significant risk. Now, next question is from company audit chapter. Let us see what is it. XY & Co, a firm of chartered accountants, consists of 2 partners. The firm already holds appointment of 40 company audits. And what are those 40 companies? The list also they have given. Listed out of that 40 companies they are auditing. 2 are listed companies. Unlisted public companies are 30. Small companies are 2. 1% company is 1. Private companies having a turnover of more than 100 crores and their paid up capital is less than 15 crores each, those are 5. They are giving a breakup of 40. First of all, this firm is containing how many partners? 2 partners. 2 partners means how many audits they can do? 2 into 20, 40 audits they can do. But in the ceiling limit, certain companies will not be included. Which companies will not be included in the ceiling limit? 1% company, small company, dormant company and a paid up company having a capital of less than 100 crore rupees. These companies will not be counted in ceiling limit. So they are telling currently 40 companies they are having. This 2 will be counted in the ceiling limit. 30 companies also will be counted. Now small companies, this small company will not be counted in the ceiling limit. Next, 1% company, this also will not be counted in the ceiling limit. Private companies having paid up capital of less than 15 crore. See, what is turnover doesn't matter. What the act has told? A private company having a turnover of having a paid up capital of less than 100 crores. that will not be considered in ceiling limit. What is turnover doesn't matter. In the given case, they are conducting audit of 5 private companies whose paid up capital is 15, which is less than 100 crores. Even this also will be excluded. So even though they are having 40, these 8 companies will be excluded from the ceiling limit. So they are actually holding 32 companies only. Even though they are holding 40 companies, in the ceiling limit, only 32 will be included, 8 will not be included in the ceiling limit. That means they can accept 8 more audits. The firm is offered appointment of two more companies, the details of which are as under. CSK Private Limited, turnover 360 crores, paid up capital 105 crores. They can accept? Yes, they can accept. Why? Because they are only having 32. They can accept 8 more. No. This 8 will not be counted in the ceiling limit. That means they can accept 8 more companies. So can they accept audit of CSK Private Limited? Yes, they can happily accept. One more company approached them, TMK Private Limited. Their turnover is 345. Paid up capital is 100. Can they accept this? Yes, they can also accept this. No issue. Understood? So discuss whether XY and Co can accept appointment of two more companies stated above. Yes, happily they can accept. Next question. Understanding the entity and its automated environments involving understanding how IT department is organized, how IT activities happen, and IT dependencies, risk and controls. Explain stating the points that an auditor should consider to obtain an understanding of company's automated environment. So what things you will try to understand regarding client's automated environment? So obviously we have to understand about client's automated environment, but what specifically you will understand? What systems they are using, what is their purpose, where they are located, what is their architecture, which version they are using, what is the interfaces they are connected with, which other softwares, is it a in-house software or packaged software, outsourced activities, who are the key persons. These are the things which we need to understand. Next question. KZRG Private Limited engaged in business of manufacturing of tea in Assam, which is actually registered as small enterprise under MSME Development Act. Such manufacturing business falls in non-regulated sector. The turnover of the company for the year 2022-23 was 48 crore rupees. Is it required to maintain cost records? This is from the company audit chapter, applicability of cost records. When cost records will become applicable? If the turnover in the preceding financial year exceeds 35 crores, then cost records will become applicable. In the given case, the company's turnover was 48, limit has exceeded. In the current year, they have to maintain cost records. But however, there is one exception. What is this exception? Even though if the company's turnover exceeds the limit of 35 crores, but if it is either registered as small enterprise or micro enterprise as per MSME Act, then they are exempted from cost records. In the given case, company's turnover exceeded 35 crores, but they are registered as small enterprise. That's why they are covered under exemption. They are not required to maintain cost records. This you have to explain it in an elaborated manner. Next one. Discuss any 4 examples of circumstances where the auditor may consider it necessary to include an emphasis of matter. See, when we will use emphasis of matter, when we feel that some information is important for users' attention. They're asking you some examples. They're asking you to give examples of certain matters which can be highlighted in emphasis of matter. So they're not asking about definition. They're asking you some examples of events which can be highlighted in the emphasis. Here we have examples. If there is any uncertainty, that is a pending case is going on, that you can highlight in the emphasis of matter. If you find any subsequent event, that you can highlight it in the emphasis of matter. Early application of new accounting standard. Your client has adopted accounting standard earlier than its effective date. This you want to highlight it to the user's attention. Highlight it in emphasis of matter. And if you find any major catastrophe, like any major fire accident, major calamity, so that also you can highlight it in the emphasis of matter. So these are the few examples which you can highlight it as a emphasis of matter. This content you will be able to find it in audit reporting chapter of our material. Say 706. Next one. Bansal Yarns Limited is engaged in manufacturing and trading of yarns of different types. Its huge funds are locked up in accounts receivable. Moreover, management of Bansal Yarns Limited is worried about its internal control system over receipts from accounts receivable and other receipts. Management wants to understand from you as an auditor few techniques as to how receipts can be suppressed, resulting into frauds. What are the various ways for suppression of receipts? This question is from fraud and responsibilities of auditor. What are the various techniques available for suppression of receipts? What are they? Teaming and lading, adjusting unauthorized rebates, writing off as debts after collecting the payment, not accounting for cash sales, not accounting for miscellaneous income, or writing down the assets entirely and going and selling them and realizing the proceeds. So this is what the various techniques for suppressing the receipts. Next one, state assertions that are implied in the extract of the financial statement. They are giving some extract. P&L 4 lakh rupees, depreciation up to previous year 1,40,000, for the year 26,000, total accumulated depreciation 1,66,000, 2,34,000 is a written down value. What is the question? indicate different assertions in respect of account balances. See, when it comes to account balances, what assertions we will verify? We will verify assertions like existence, rights and obligations, completeness, valuation and allocation. So one question is answered. One more question. State specific assertions relating to above extract. Regarding the above extract of the financial statements, what assertions you will verify? So we will verify whether the firm owns the plant and machinery. The historical cost of plant and machinery is 4 lakh rupees. Plant and machinery really exist or not. The asset should be used for the business, and total depreciation is 1,66,000 on to date, on which 26,000 belongs to the current year. Nothing but classification also we have to see. Next one. Coming to the next question. What is tolerable misstatement? What is tolerable rate of deviation? This question is from Audit. Total rate of deviation, not total rate of deviation. It should be actually tolerable rate of deviation. Let me see the answer. Yeah, tolerable rate of deviation. Okay, that is also called as total rate of deviation. So what is this tolerable misstatement or tolerable deviation? Very simple, guys. The name itself says tolerable, the risk which auditor is willing to accept. What is tolerable misstatement? The misstatement which auditor is willing to accept. See, while conducting audit, the auditor assumed that in this financial statements, if the misstatement is 10 crore rupees, that I will accept. If the actual misstatement is within the limit of 10 lakhs, I am ready to accept that risk. That means if the misstatement is within that 10 lakh rupees of limit, I will not modify. I am ready to accept that risk. So tolerable misstatement means the misstatement which auditor is willing to accept, the risk which auditor is willing to take. That's what we call it as tolerable misstatement. The same thing has been defined here in a technical manner. Then what is tolerable rate of deviation? See, tolerable misstatement, we use it for substantive audit procedure. Tolerable rate of deviation, we use it when we are performing compliance procedures. That means the auditor, while verifying test of controls, he is assuming if this much deviation in internal controls is there, I am willing to accept it. If in 100 internal controls, if one internal control is not working, I am ready to accept that deviation. So the deviation in the internal controls which auditor is willing to accept, that we call it as tolerable rate of deviation. Tolerable misstatement means the misstatement which auditor is willing to accept. Tolerable misstatement, we use it when we are designing substantive audit procedure. Tolerable rate of deviation, we use it when we are designing compliance procedures. Why? Because for controls, deviation will be there. When we are verifying transactions and balances, their misstatements will be there. Understood? The same thing they will try to explain, so you can have a look at the answer. Next, G and Associates are the statutory auditors of R Limited, a company engaged in the business of manufacturing of blankets. The auditor has completed the audit and is in the process of forming an opinion on the financial statements for the financial year 2022-23. CAL, the engagement partner, wants to conclude that whether financial statements as a whole are free from material misstatements, whether due to fraud or error. What factors he has to consider? So if you want to form an opinion whether the financial statements are free from misstatements or not, what factors you will keep in mind and form that opinion. So what things you will try to consider while forming an opinion? What things I will consider, guys? Whether financial statements are free from material misstatements, fraud or error, whether they are prepared as per applicable financial reporting framework, and we will check qualitative evaluations and quantitative evaluations, and also we will check whether the misstatements whatever we have identified, are they material or not material. So this question is from actually SS 700. If you open SS 700 from the material, you will be able to find it. So what things auditor will consider, what factors auditor will consider while forming an opinion? As you could see, whether he has obtained sufficient and appropriate audit evidence, what is the effect of the incorrect misstatements, and also he will do various evaluations. Next one. Discuss the audit procedures generally required to be undertaken by the auditor while auditing goods sent out on sale or return basis. This question is from audit of items of financial statements. When you are sending the goods on sale or return basis, what things you will try to verify? Very simple. If you apply common sense, when you are sending the goods on sale or return basis, will you immediately recognize sale? No. What we will do, we'll keep on separate account. In that, we'll try to record it. When actual sale entry will be recorded, you send the goods on sale or return basis, and the recipient has accepted, given his approval, or you have given him a time limit and that time limit has expired. In those cases only we will recognize sale. If the time is not at expired, for example, in between balance sheet date has come, you have sent the goods on sale or return basis, the time which you have given him is on till 10th of April, he can accept or reject. But in between balance sheet date is there. On 31st of March, the goods are still lying with the recipient and the time is still there for him to accept or not. As on the balance sheet date, till still 10,000 quantity of stock is there with the recipient. Should it form part of the person who sent it or the recipient? They should form part of the supplier's goods, supplier's stock. See, what actually I'm trying to tell is, this person has sent the goods to another person. He is the recipient. He has sent some stock. He sent the stock on 1st of March. He has given the time to the recipient to accept it till 10th of April. In between, 31st of March has come. So this person is still having the time to reject or accept. As on 31st of March, 10,000 quantity is there with this person. Should it form part of this person's stock or this person's stock? It should form part of this person's stock. So you need to obtain, this will be a case of inventory lying in the custody of third party. You need to perform procedures as per SA 501 also. So like this, a brief will be given in the answers. You can refer it. Next one. The auditor obtains an understanding of the information system, including related business process relevant to financial reporting. To gain insight of this important component of internal control, what are specific areas in respect of which auditor has to gain understanding? So this question is from risk assessment and internal control. If you remember, there are 5 components of internal control. Number 1, control environment. Number 2, entities risk assessment process. Number 3, information system including related business process. Number 4, control activities. Number 5 is actual monitoring of the controls. Monitoring of controls. These are the 5 components. In that 5 components, they are only talking about the third component, information system including related business process. So that you have to write here. You will find the details in the answer. So out of the 5 components, they are only asking us about the third component, information system including related business process. The third component only you have to write here. Next one. So let us have a look at next question. Last set of questions. While verifying provisions of advances of branch of MCO bank as a part of statutory branch audit, CA notices that credit facilities consisting of term loan to KRT enterprises have been classified under doubtful category. The outstanding balance in the above loan account is 50 lakh, out of which security held is 40 lakh rupees. The branch has made a provision of 7.5 lakhs. Is the provision correct? See, this is from accounting of banks. Provisions they are asking. So they are telling 50 lakhs has been classified as doubtful, but in this 40 lakhs is secured, the remaining 10 lakh rupees is unsecured. Unsecured doubtful category 100% provision, secured doubtful category 25% provision. So 40 into 25%, 25% into 40, how much it will be? So here I have to create 10 lakhs, here also 10 lakhs only. So let me see the answer here. Yeah, correct. So you need to create 25% of the provision for secured portion, 10 lakh rupees. For unsecured part, complete 10 lakhs, 100% you have to create the provision. So the provision which the bank should have created should be 20 lakh rupees. But in fact, how much provision is created? Only 7.5 lakh rupees of provision is created. Is it correct? No, this provision is incorrect. They should have created 20 lakh rupees of provision. Auditor should have given a modified opinion. Next one. Before commencing the audit of local bodies, a chartered accountant employee in a firm of XYZ & Co, firm of chartered accountants, seeks assistance of Mr. X partner in preparation of audit program for local bodies. Direct question here, audit of various entities. How do you conduct audit of local bodies? What audit program you have to include? So direct question, we have this is something which is purely out of common sense, and we have understood it in a detailed manner in our regular classes also. So please refer the material, or even you can refer the answer here. The same things whatever we have given in the material, same thing will be included even in the suggested answer. How do you conduct audit of local bodies? That you have to write. Next one. ABC Limited wants to buy some equipment on lease and hence is required to sign lease agreement with the supplier of the equipment. What are the important points to be considered in the lease agreement? If someone is required to enter into lease agreement, before you sign, what things you need to check? We need to check who is the lessor, name of the lessee, what property is getting leased out, where it will be situated, what are the terms and condition of usage, will it fall under finance lease or operating lease? After the completion of lease period, who will keep that asset? Will the lessor will keep the asset, lessee will keep the asset? What is the method of payments, periodical payments or bulk payment? So all these things we have to read in the lease agreement. So you can refer the answer for this. As an auditor, how would you check and verify the receipt of income of NGO? What kind of incomes will be there for NGO? Donations will be there. From members, membership fees will be there. Membership fees will be there. Contributions will be there. Government grants will be there. Specific donations will be there. So how do you verify it? So this is this also we have understood in our classes. The same thing they try to say here. So contribution and grants for projects and programs that they will get. They will do fundraising programs for that also, from that also they will get income. They will have members, from members membership fees will be there. They will have magazines, from that subscription income will be there, and even if they have any investments, from that interest and dividends also they will receive. That also you need to check it. Next one. Explain treatment of advances under consortium. This is from the question. This is from the chapter audit of banks. What will be the prudential norms for consortium advances? First of all, what is consortium advances? Group of banks coming together. For example, one person has asked a loan for 100 crore rupees, but a single bank did not give the loan. All the banks came together. For example, SBI, ICICI, Axis Bank. 3 banks came together and gave the loan. So SBI gave 60 crores, Axis Bank gave 20 crores, ICICI gave 20 crores. This collectively they have given 100 crores of loan to this person. This we call it as advances under consortium. Generally, the bank with highest share, that we call it as lead bank, and remaining banks we call it as members bank. See, if the customer is making payment to the lead bank, for example, he paid 10 crore rupees of installment to SBI. SBI has to keep the share. SBI has to keep 60% share. SBI has to keep only 6 crore rupees. Balance 4 crore rupees, they have to distribute it to members bank, Axis and ICICI. So if the customer is making an installment payment to the lead bank should keep its share and transfer the share to respective members. If the lead bank is not transferring the share to members bank, then this members bank is required to classify this person's account as NPA. So that's why there should be proper communication between lead bank and members bank to avoid unnecessary classification of NPAs. So this is what they will try to say regarding prudential norms for consortium advances. You can refer to Audit of Banks chapter for more details. Clear? So these are what the questions which have been asked in MTP series 1. So this is what my purpose of doing this video, guys. So this I will upload, and soon I will do MTP series 2 also. That also I will do analysis and share it with you. Thank you so much, everybody. Take care, everybody. Bye. See you in the next session.